It's Brian Preston, the money guy.
I mean, we went through a pandemic last year. I mean, so a lot of things got shut down. Supply chains are disrupted. People were in lockdown mode at their house. Yet somehow, I mean, this has to be rigged. The stock market made money.
It was, for all intents and purposes, if you were to ask anybody who would, from a different planet, how would 2020 of stock market have done given this, all those things you named? They said, oh, no way was it a good year. And yet, we look back, and it was a great year for investors.
So that's the first way that I've heard people say the stock market's rigged. Number two, Bo, it has to be. You're a CFA.
Oh, yeah.
It has to be that hedge funds, the elites, they got better access. They got better information. It's rigged for those rich folks.
Well, they must, because Warren Buffett is worth billions of dollars. Peter Thiel has billions of dollars in a Roth IRA. So because they're in the know, because they know folks, surely it's rigged, and it is rigged to their benefit in their favor.
And if it's not the rich folks who have better information, it's number three. It's the computer algorithms. It's the fast traders, the high-frequency traders. They've got it rigged, and they've got an advantage over you, too.
That's right. Way back in the day when it was like on Wall Street, the stockbrokers were doing it, algorithmic trading wasn't taking place. But now that computers have entered the scene, it's totally fixed, totally rigged for the computers to be able to have the competitive advantage.
So let's actually take a deeper dive into these three different scenarios and see, is the system actually rigged for these examples? And number one, I want to take a closer look is the stock market rigged when you think about the fact that we went through a pandemic, all the economic things are going down, yet somehow the stock market went up. What can explain that?
Yeah, this one I think was pretty easy. And if you've ever taken any sort of like economics type class, you understand the stock market is actually a forward-looking indicator. It does not measure things that are presently happened or that have happened. The stock market is trying to measure what it anticipates or think is going to happen. So if the market is a forward-looking indicator and we're going through something like the COVID downturn, you must assume that investors or the market as a whole might be thinking, oh, perhaps things will not be as bad as we think that they're going to be.
Well, you think about the cycle of market emotions. Everybody, when markets are at all-time highs, they think they're geniuses.
Yep.
I mean, you see it, and there's even been, our Fidelity had a thing, and I need to go see if they've ever updated, that had, like when the dot-com bubble burst,
Sure.
It had levels of cash to opportunities in the market, and guess what? Nobody had cash.
That's right.
When the markets are at all-time highs, because they got it all loaded up in the financial markets. But yet when the stock market got crushed and it's going down and everybody ought to be piling into investments, everybody wants to hoard cash at that point.
Then.
So it's just one of those things where I think a lot of times people are surprised to find out that you might have the best opportunity to invest when things are falling apart around you, because this thing is a forward-looking indicator. So the market will actually, that's why we always talk about V-shaped recoveries, is that you'll see prices start to drop. You watch the price-to-earnings ratio, you watch all kind of other indicators, and then all of a sudden you'll see a V-shaped turnaround, meaning the market will go down, and then one day it will start spiking to the point that typically after you hit the bottom of like a bear market, within a month, you will have a double-digit return. Within a year, the typical return is like 24 to 30% rate of return. This thing will turn around very quickly. So you always need to understand the stock market doesn't represent today or even yesterday. It represents some period in the future, and it's a forward-looking indicator.
Okay, so what about the financial elites? What about the folks who have an edge in the market because of the special knowledge they have? Well, what's really interesting is if you look at the data, and there's research by Spiva that corroborates this every year, the average buy and hold investor outperforms the average active investor over longer periods of time. If we look over the last 20 years, index funds have beat active funds around 90% of the time, depending on which asset class you look like. So while there could be outliers like a Warren Buffett or like a Peter Thiel who invest a little bit differently than the average investor, by and large, index passive buy and hold investors tend to outperform active investors. So it doesn't seem like, oh, maybe the folks who know more or are more highly educated actually have an edge. Maybe it's not rigged in their favor.
And then the third thing we had brought up as an example was the computers have come on the scene, the artificial intelligence, the high frequency trading. You know, even think about all the Reddit boards. I mean, how often the Wall Street bets, you see all the GameStop, you see all these other, you know, where it straight up seems like manipulation of the stock market. How can you compete with that? There's something to pay attention to there.
Absolutely. So if those reasons are inaccurate, right? Like the common reasons that people think the market is rigged, is it actually rigged? And I am going to stand by our stance, Brian, that yes, it is rigged. But I have an idea. Some folks are saying, no, guys, you haven't. I'm not buying it yet. You haven't gone deep enough in on this just yet.
Well, I think people are probably all confused because they heard us tongue in cheek go through 3 different ways people say it's rigged, and then they hear you say, you still think the market's rigged. So a lot of people are going, what do you guys believe? Where do you fall on this question? Is it rigged? We squarely fall on, yes, the stock market is rigged, and we can prove it. We've got the receipts, and we'll show you step by step how it is rigged for the right type of folks.
And so that begs the question, who are the right types of folks? Who are the folks that the stock market is rigged for? Well, first guess I imagine most people would be thinking is the stock market rigged for the wealthy?